In this video, we'll talk about the income stocks, better known as dividend stocks. The concept of dividend is quite simple. It represents a sum of money paid regularly by a company to the shareholders based on their profit. It's important to mention that not all companies offer dividends. Also, that there is no standard about how much or how frequent the dividends are being paid. When choosing dividend stocks, we want to focus on two specific points. First of all, since we don't want to take useless risk, we want to make sure that the company is financially stable. The second point is we want to find a company who always pays dividends on time, which is normally every 3 months. The percentage paid by each company will evolve with time, depending on their financial anticipation and on the current economic situation. So while choosing dividend stocks, we need to pay attention to the payout ratio. The higher it is, the more it guarantees you that the company will send you money every 3 months, although some companies may choose to keep their dividend money in order to reinvest. If so, the less often they're paying, the lower their payout ratio will be. You now understand that as an investor, we'll prioritize companies with the largest ratio. Generally, we'll find the highest payout ratios company in the large caps category. Now, let's look at a company that we all know. Coca-Cola is quoted on the New York Stock Exchange. The stock symbol is KO. This company is obviously part of the large cap. We can also note that by looking at the graphic, this is a stable company with a slow growth. Obviously, you can notice the massive drop caused by the COVID-19 crisis, but this is negligible since most of the companies were affected similarly. Since the price quickly dropped from $60 to $40, this would have been a great investment opportunity in order to buy shares while the price was at its lowest. Since the company offers dividends and that the price is currently affordable, this market is for me. Very tempting. Now, if we look at the dividend history, we see that the price constantly increased over the last few years. Obviously, the crisis strongly affected the dividend prices. But again, once the market will stabilize, the dividend prices will assuredly go back to its normal levels. Now, speaking of the dividend price, the last column before the crisis was for the year 2019. The $1.60 represents the cumulative of the 4 quarters. So, for 2019, for each share owned, Coca-Cola paid us 40 cents every 3 months. Now, you're probably thinking, this is not a lot for a stock of this price. Sure, but the goal is to own a lot of shares that will not only increase the value over time, but also give us the extra bonus, which are the dividends. When you first start to do some income investing, depending on your capital, it might take some time before you start making a significant profit. That said, it is with time and patience that you'll be able to build a powerful portfolio, which will allow you later to gain a good amount of money every 3 months. That's why the sooner you'll start, the more money you'll make on the long term. Another business that I selected is Johnson & Johnson, a century-old company that is on the stock market since already 40 years. As you can see, this company value has grown in stable fashion for many years, and the dividends paid always followed the same growth pattern. If we compare this company to Coca-Cola, we can see that the dividend sum is considerably bigger, although the share's price is at $151. So, in the best case scenario, unless you are already a millionaire, we are looking for affordable and stable companies that have a good payout ratio and a high rate of return.